Balance. Order blocks and imbalance. I'll share my whiteboard. Now we have to understand something. The order block and the imbalance are the same. They are the same. First of all, you know this. But the only difference is this. There is an order block in imbalance when you go down to the lower time frame. Are you getting what I'm saying? Order block and imbalance are same. Same, just that there is an order block in the lower time frame when an imbalance formed. When an imbalance formed. So they are both key level areas. They are both key level areas. Now I'm going to show us the graphical representation. I'm going to show us the graphical representation of what order block and imbalance is. Now, this is an order block. A particular candle, let's assume this is a bullish market. The market was actually going home. Now, a particular candle that made price push downward. That made price to push downward very quickly. It put price away from a particular region very quickly. That is what an order block does. It pulls price away from a particular region very, very, very quickly. Very, 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 very quick. These are the bearish candle. Now, this particular bar you are seeing here.
Excuse, please. I can't see anything on my screen, please.
Engineer, are you seeing my whiteboard?
I can see it.
Yes, I'm seeing it. I'm seeing your whiteboard.
Mr. Adamu, can you see my whiteboard?
Yes, I can see it.
All right. So, Ayotunde, can you see it now?
Yes, sir.
All right. So now, this particular bar you are seeing here is the order block. This is the order block for a bullish market. For a bullish market. Now, when we are looking for a bearish market, the same thing. Price came down. Price was dropping. We have the drop. Then price shoots up. Price shoots up very quickly, leaving that particular price region, this particular region here. Now, this is a bearish order block, and this is a bullish order block. Now, this is the formation of order blocks. This is the formation of order blocks. Now, I want to use this formation to answer the 3 important questions pertaining to order block. What does it do, or why order block? What is the implication? The implication is this. So far, we have an order block here. And price did not either retrace, did not either go back up to form this. Instead, price did what? Price drops immediately. The thing is, the motion behind this order block is price is going to go back to fill this order block, respect this order block before dropping down. Are you getting it?
Yes.
For the bullish side, price is going to come back down to this order block region. This order block region. before going back up. This is what order block is used for. This is the essence of order block. Now, where will our stop loss be when using order block? Our stop loss will be below this particular wick. Are you seeing it? This is where the stop loss will be. And this is where the stop loss will be for a buy market, above this particular wick. Stop loss. So we are going to sell down to this point. We are going to sell down, first of all, to this area where the market dropped. Then if it is a trend, it keeps on going back down. Also, this place, we buy back to this particular high. We buy back to this particular high, and the market keeps on going up if it happens to be a trending trade. Now, this is the basic behind, the logic behind order block. There is nothing again. Now, entry. When entering from the order block, I want you to focus on two things. This is it, this particular point. Price can retrace into the whole area of this candle. That means it might decide to do this. It might decide to do this. Price might decide to do this. Go back up. Go back up. Then decide to drop into this particular low, this particular point. This particular point. The whole body of this order block is area where price can reverse to around this point. Then decide to go back up. Now, this is what you want to see for order block. This is what you want to see for order block. This is what you want to see for order block. Don't forget your stop loss want to be below this particular area. Now, the third thing I will talk about now is the entry. The entry. The entry is always this region. For example, this is your order block here. This particular region of the order block, the entire body and the wick price drops. This region now is the area where you want to see the price reversal. That is your entry area. That's why some people, they will just set their sell limit around this area. Maybe some people might decide to put it at the middle of this particular bar, sell limit here. Some people might decide to put their sell limit around this point and put their stop loss here. Then they sell down. They sell down. So your focus area is this particular point. This is where your focus area is. Now, what I normally do with order block, what I do with order block most times is this. I don't just enter because I don't like using a limit for my entry. I love seeing the price reaction around that my entry region before I sell or I buy. I love seeing the reaction. So what I will do is this. When price comes to this point, there is a particular bar that price will always form. And that bar is either it forms an hammer. Either it forms an hammer, but I don't want to see it like an hammer. What I call it is, because I use a bar chart, but price will either form an hammer, bar. And after the hammer bar, the next thing you will see is that the next particular bar is going to engulf this hammer bar, that is engulf, push price further down very fast. This particular bar formation is what I want to see. This is the bar formation I want to see for my entry, at least to trust this order block. Why I said to trust order block is, like I said, I don't like using my entry with a sell limit. I love entry, so I'll be able to see market reaction around that region. And I might decide to put my stop loss at the top here, and at the end of the day, the market hit my stop loss and started falling. Why? Because of this particular wick formation. Because of this particular wick formation. This week. The market can decide to go up to my stop loss region here, take out my stop loss, then drop and close this way, then continue dropping. So what I love to do is I don't use my stop loss. First of all, I wait for that particular bar to close. And once the bar closes above it, I come out. I accept my loss. Or I'm going to enter the trade and monitor it closely. But I love seeing this formation. I love seeing this formation, first of all, before I decide to say sell. Because what the market can do is this. When they form this is now the area of what? Our stop loss region, the ISI the market can go. So they might decide to come back up like this and drop. This is more confirmations I use. They might decide to go back up and drop. So this is just it for the entry. The same thing for the bullish side. What I want to see the same hammer bar, price hammering out from this particular order block region. Then a particular bullish bar that is going to engulf and close higher, move. When I use volume, this is called stopping volume. But for now, just know that there's an engulfing bar and an hammer. Then price is going to go what? Shoot up, or price is going to come back and replace this zone, then shoot up. Now, this is everything as regard order block. Everything as regard order block. Then the next thing you want to talk about is the refinement of order block. Refinement of order block. When you refine order block, I want to share another screen. Another whiteboard, rather. Can I clean all this? Can I clean it? Do we understand? I want to talk about the refinement.
Yes.
Now, this is when it comes to the refinement of order block. Let's talk about the refinement. When it comes to refinement of order block has to deal with the time frame. Anytime you hear refinement, just know that we are dealing with time frame. Time frame in the sense that you want to refine, you want to go back to a lower time frame and look for a particular order block. What am I saying? If this is the 4-hour time frame, if we have the 4-hour time frame here, we have the 30 minutes time frame here, and we have the 5 minutes time frame here. Price drops, then we have the pulling away. Price pulled out from that particular region very quickly to confirm this as another block. Please note, sometimes a particular bar can form here. It's not necessary that it's going to go above this particular. No, a particular bar can form here, a bullish bar. So now we know that this is our order block region. Now, if you notice, I'm stretching this to the other time frames. Now, when it is refinement, when you come to the 30 minutes time frame, you will notice that there is another order block in this particular point in 30 minutes. This is a big order block in 4 hours. But this particular order block, if you notice, it happened where? Around this week. of this particular place, right? The height of this order block is the wick of these 4 hours, yes or no?
Yes.
Good. Now,
Yes.
if you notice it, if I use this week now, this order block as my point of entry from the 30 minutes time frame. So what am I expecting? I'm expecting price to come down to this point and buy up. So, but in this point, my stop loss here will be very, very big. Why? Because I'm trying to compare this whole region. Are you seeing it? But in this particular case, because of I have refined my order block to this particular bar here, my stop loss will be smaller. My stop loss will be smaller. Why will my stop loss be smaller? Because I have refined it to this particular order block. So I want price to come down to this particular place, this level of this order block, then go back up. Now, if my entry is here, my stop loss is here, it is small compared to when my entry is around this region and my stop loss is here. So when you are talking about refinement, you want to talk about precision, precision and what? Lower in low stop loss. You want to reduce your stop loss. Now, if I now take this particular order block now that I formed here, this particular order block for me, I want to refine it to 5 minutes. You will notice that in this particular week, around this region of this particular bar, it is not necessarily the week, but around this region, there's a particular bar that started the movement, price pulling away. Price pulling away. Now, what happened? I want price to come back to this place and shoot back up. This is everything about refinement. Nothing again. The refinement of order block. That's why even our entry strategy, when you refine, you are going to a lower time frame. When they say refinement is all about going down to a lower time frame. Do we understand?
Yes.
So refinement is all about going down to a lower time frame and nothing else. Nothing else. You have to go down to a lower time frame to refine that same thing you saw in the higher time frame. The same thing you saw in the higher time frame, you want to see it in the lower time frame. Refinement. That is just what it's all about. So I don't know if there is any question. I want to talk about imbalance right now. Then we can now go down to the charts. I will take 2 or 3 examples, then we'll call it a day. I don't know if there's a question. Let me talk about imbalance. Any question?
No question yet.
Okay. All right. Let me go to no question. Let me go to the next one. Let me go to the next one. I'll clean everything here. Now, like I said, imbalance. I said imbalance and order block are the same thing, but the only difference is in the imbalance, when you go to the lower time frame, there is an order block inside in the lower time frame. And why the imbalance himself listing has to deal with the weak body of a particular candle bar. And it is not just one bar, it is 3 bars. 3 bars. 3 bars. 3 bars determine imbalance. Determine imbalance. 3 bars determine imbalance. An imbalance is a particular area in the middle bar among the three that the wicks of the first and second bar did not cover. Did not cover. This is an imbalance. This is an imbalance. What does it do? It pushes price very quickly away from a key level area. And how do we take the trade? The entry, just like the other block. The other block. We want to see price retrace. Price retrace back to the imbalance region and continue the trend. Now, this is imbalance for you. The imbalance, 3 bar determine the imbalance. Good. Now, let me draw them. This is bar 1. This is bar 2. This is bar 3. 3 bar determine the imbalance. Let me label them. Bar 1, bar 2, bar 3. Now, I said an imbalance, and imbalance is a particular area in the middle. Okay, in the middle bar. In the middle bar, that means the second bar among the 3 bar. That means this particular bar now. This particular bar is the bar we want to watch out for, this second bar. That is the bar we want to watch out for. Among the 3 bar, that the wicks of the first bar. Now, since this is a bearish market, the market is falling. The wicks of the first bar is the lower wick we are looking at, and the wick of the second bar is the upper wick we are going to look at. Did not cover. Did not cover in the sense that if you look at it, there's a space here between these 2 wicks. Are you seeing it? Yeah. Are we seeing it?
Yes.
I can't hear you. Are we seeing it?
I can see it.
Good. There's this particular
Yes, we can
space.
see it.
Okay. There's this particular space that the market did not cover. This place where that 2 is. Let me put a let me put a green marker. There's this particular place, all this place you are seeing. This is the imbalance region. Are you seeing it now?
Yes, yes.
This is the imbalance region. Why? Why is it the imbalance region? Because this wick here and this upper wick here did not lock. They did not lock in the sense that, when I mean they did not lock, I'm trying to tell us that it is supposed to be like this. The market drops. The next candle form an imbalance. and the next candle start from this zone. Now, if you notice, when I mean lock, the lower wick here, this particular wick here, and the upper wick of this third bar, they close every region of this second bar, right? Right? Are we there? I need answers. Are we there?
Yes, we are there, sir.
Good. I'm
But I
asking.
need.
You need what?
Yeah.
You need what?
I need you differentiating between liquidity void or fair value gap and this imbalance.
They are the same thing. They are the same thing. They are the same thing.
Okay.
Just different language.
Okay.
Different language. Different language. Just different language. I don't know if you get my point. Different,
yes, I get it.
different language, different people. That's why they want to see it as, some people call it fair value gap, some people call it imbalance, but the liquidity is not the same thing with them. We'll talk about liquidity next, but it's not the same thing with them. The fair value gap and the order block are the same thing, just that they are different causes that actually put them together. And some people actually went as far as saying they are not the same thing and trying to put their own attribute and the rest. I don't know if you get my point.
Yes.
Just like this imbalance now. There's in order block, we have the king order block and all those things. The king order block is just the same thing as the imbalance. There's a particular order block inside the king order block in the lower time frame. I don't know if you get the point.
Yes,
So there are so many people just have to go in depth, and what you just need is, you don't even necessarily need, what you just need actually is to know the key level areas they are to retrace to. Then when they retrace to, you are not entering the trade based on them retracing to the key level area. No, you are entering the trade because of you need the confirmation to continue going short. You get the point?
Yes.
So this is just the imbalance. This is for a bearish side. Now for the bullish, let me draw for the bullish. Let me draw for the bullish. For the bullish, market goes up, push further, now this is the second bar, the bar of focus. This is the second bar. This is the this is the wick, the upper wick of the first bar, and this is the lower wick of the second bar. So where is our imbalance?
The space between. The space between.
Good. Now the space between, and which is this particular point? Which is this particular point? This is our imbalance. Now we want price to actually come down to this place, around this point, then shoot back up. That is just imbalance. And our stop loss is what? Around this region. Yeah. Stop loss. Yes. Or if you want to give it more space, we can bring it around this last bar and put our stop loss here. But of course, if using the UTEP, our entry strategy, if you want to use our entry strategy, in as much as the market has come down to this point, of course, we want to see the market doing this and going up, or forming their what? Hammer, bullish engulfing,
and bullish engulfing.
then they go up, or then we bring it back down to this point, this particular level, and take it back up. So this is what we want to see. I will get it, but it is always better to always take this thing in line with the trend, not counter trend, in line with the trend. So we're going to end the class for now. So I will send another link, then we'll go back, or let me just see if I can do everything together right now. Let me see. I have 8 more minutes. It's already late. 8 more minutes. Let's see. Let me take a particular example from the chart. Let's take a particular example from the chart. Take a particular example. I'm trying to load my chart. Coming. All right, take a part. Can you see my chart now?
Yes, I can see it.
All right, now, this is the particular area we want to look at. Particular area I want to look at. I'll try and see. All right, now, if you notice, this is an imbalance and even an order block region. Can you see?
Yes.
That's an imbalance and order block region, right?
Yes.
Good. Now, if we go down to 30 minutes, let's see if we can see that area. Are you seeing that in 30 minutes, there's another block here in this imbalance? Now, I want to refine this other block. If I go down to 15 minutes, let me go back to 15 minutes. Can you see now that the other block now has been refined to this particular last bearish bar? Can you see? Are we seeing this? Hello, I need answers.
Yes.
Good. Now, if I go down to 5 minutes, can you now see that I can now refine it now? That, okay, this is the real order block. This particular one that is now here. This is the area of the real. Are you seeing this difference now? When we come to 1 hour, this is how big our order block region is. This is it here, and this particular low. When we come to the 30 minutes, this is how small our order block region is. Yeah. Let me change the color of this to green. Yeah, and this particular point. When we come to the 15 minutes, are you seeing how small the order block region has now become? This particular bar. Let me change the color. Are we seeing this? Now we'll come to 5 minutes. Can you now see how small it has become? You can use this point and use this particular low here as our order block. Do we see it now? Now, if I go back to 1 hour time frame, And when I say, okay, this is an area of order block, this is another area of order block. Yeah. This particular point is another area of order block. So what am I looking for? I'm actually looking for price to come down this point, form the formation and go up. Or I want price to shoot down, form the formation and go up. This is order block for us. And let us look for a particular example. Let's see where order block actually acted as a region of support and resistance. They are much here. They are actually much here. But let me see, let me pick this one. This particular region. The other blocks are everywhere. I'm seeing many, but I don't want to pick anyhow. I just want to, I'm even looking for the best one safe. There are actually many. See this one. These are other block region. Now, if you notice, this place acted as other block. This place acted as other block. Price came back to retest it, acted as other block again. Look at the hammer and the engulfing. Price came down to this point again. After that other block, hammer, then the next price shoots up very, very quickly, forming a what? A fair value gap. Forming a fair value gap. Are we seeing it? Forming a fair value gap. Forming a fair value gap around this point. Let me put this thing. Let me see what our price will test this particular fair value gap in the future. All right, look at it. Can you see how price reacts to the fair value gap in the future? They did this. This is how price reacts to the fair value gap in the future. Look at it. Give us our formation, break it, come back. This is another block region. They went back up. So this is exactly how the other block works. I'm going to send this now on YouTube. We watch it. Then tomorrow on Monday, we have another class. We'll talk on other block. Place on the chart. We will not use the whiteboard, just the chart. So we'll see many examples. Hope we get that.